second part of our lesson is accounting equation. Accounting equation is also known as balance sheet equation. Balance sheet equation. This shows the relationship between three components of the accounting elements we learned earlier. Those are assets, equity, and liabilities. How many are there? How much are there in these components? The accounting equation shows how many assets, how many equity, how many liabilities are there inside a business, or the connection, the relationship among these components. Now, when we are building this accounting equation, the first transaction we have is owner investing capital. To start any business, the first step is initial capital. Initial capital means the first amount of capital invested by an owner to start a business. When considering these components, let's see how that investing capital affects these components. Let's see. Now think, owner investing ₹50,000 as capital. Owner investing ₹50,000 as capital. Now, here is the owner. He is bringing 50,000 to the business. This is the business. This is the owner. Now he is bringing cash as capital. Now what happens? Something belong to the owner comes to the business. Now if we explain it further, first owner had it, then he gave it to the business, 50,000. Now the 50,000 previously owned by the owner is belong to the business. The form of that is cash. An important thing you have to remember when we are building this accounting equation is owner and the business are two independent parties. Owner and the business are two independent parties. That concept we identified as business entity concept. What is it? Business entity concept is identifying owner and the business as two independent entities. Owner has no relation over the business. Now here, owner investing 50,000. Now this 50,000 belongs to the business. It is an asset to the business. But it is provided by the owner. Therefore, owner has some ownership, some right upon this 50,000. Now, before investing this 50,000, we had nothing. We don't have any kind of asset. But after investing this 50,000, what happened? Cash of the business increases, because before we didn't have anything. After investing this 50,000, cash increases, and cash is an asset. We learned that. Now, in the business, we have asset. Now we have assets. After investing this 50,000 by the owner, we have an asset. What is it? 50,000 of cash. Now, from where did we get this 50,000? From the owner. Now we don't have anything else. So, I told you the remaining amount of assets after reducing liabilities belongs to the owner. Here we don't have any liabilities to deduct. Therefore, what happens? This total amount of assets belongs to the owner. Therefore, this amount of assets equals to equity. Now, owner also has something on his sake. We have 50,000 cash for the business, and owner has his ownership, the right to claim this 50,000. Therefore, this 50,000 identified as something belongs to the owner as capital. The money the owner invests to the business we called as capital, and it belongs to the owner. Therefore, it is called equity. Now, at the beginning, when the owner first invests capital in cash, owner investing 50,000 as capital. Therefore, our assets increased by 50,000 because we didn't have anything at the beginning, and also this 50,000 belongs to the owner. He invested that money and we don't have any liabilities to deduct. Therefore, the 50,000 belongs to the owner. Therefore, my students, this is the first accounting equation we build in a business. Before anything happens, the owner investing capital, that is the first transaction of any business. Now, we talked here about investing cash. Now guess, he invested something else. Owners can invest anything. A building, land, motor vehicle, like that. Now I taught you how to record if we invest cash. Now let's see what happens when he invested something other than cash. We'll take the same example. Owner investing, I'm changing the amount here. Rupees 100,000. 100,000 worth means valuable, worth building. Now he is investing a building, not cash. Here the only difference is he is investing a building. How much is it? 100,000. Before he is investing, we didn't have any building. We had nothing. Now we have something here. 100,000 building. Now you know accounting entity concept. So I am erasing it. And building. Here the asset is not cash, building. As a result, building is also an asset. Therefore, assets increasing. Owner investing a building. The value of the building is 100,000. We didn't have any building at the beginning. So, when he introduced this to the business, we are getting a new asset that we didn't have before. Therefore, just like our previous example, assets increasing to 100,000. The type of the asset is not cash but building. To whom this building belongs? To the owner. We don't have any liabilities to deduct yet. Therefore, this total building, that means 100,000 buildings, belongs to the owner. What belongs to the owner we identify as capital. Under equity, it is named as capital because he invested that at the beginning, and capital belongs to the equity because the building belongs to the owner. You can get any example. Now I took building. You can take motor vehicle, land or any type of asset. But the impact is same. Assets are affected and equity are affected because at the beginning we don't have any type of liabilities. Therefore, the first equation we can make is assets equal equity. We can make this equation because still we don't have liabilities. Still we don't have liabilities. Now, let's see what will happen if there is a liability. I'll take an example like this. Owner investing rupees 50,000. But this is not enough. Think, owner investing 50,000, but he needs rupees 100,000. Now how much less? How much less? He needs 100,000 but he has only 50,000. What is the best option? He can take a loan. Now let's assume the rest of cash was obtained by a bank loan. He needs 100,000 and he has 50,000. There is a gap of another 50,000, but he has no way to get it. So, the best option he has is getting a bank loan. Now, previously I taught you bank loan is a liability to us because after the agreed period we have to pay it back. At the payment, our resources, our cash is going outside, and this value can be measured reliably because I have mentioned here 50,000, 100,000. Then we get the lack of 50,000. Now first of all, let's record this one. Owner investing 50,000. Just like the previous example, we have assets. Assets how much? 50,000 we get from the owner, cash. This is provided by the owner. Therefore, it belongs to the owner. Equity. 50,000 capital. Because it is invested by the owner at the beginning of the business, we recognize it as capital, and capital is belong to the owner, therefore equity. And next step, the gap 50,000. This 50,000 we don't have it, but we get it as a loan facility which we recognize as a liability. Therefore, we have to change this accounting equation accordingly. Now, we have assets and equity. The thing that is adding additionally is another 50,000 cash and what is the next component be affected? Now you can see it is not equity because it is not invested by the owner. This amount is invested by someone else. It is asset because we receive cash, but it is not equity. Therefore, what is it? The next component of our equation. What is it? Liability. We have to add this. Liabilities. This 50,000, it is not equity, but it is added to the business. We are adding another thing as liability. Therefore, this liability we recognize as bank loan. The amount is 50,000. Now, is it correct? Is it correct? Now, I asked you a question whether it is correct. Let's see. In the previous part, we discussed equity is the remaining amount of liabilities reduced from assets. Equity equals assets minus liabilities. Now, if we take this assets as the subject here, what is happening? This sign is changing. If we take assets as the subject, assets, what will happen? Liabilities and equity changes subject, or I'll show it like this. Now we have equity here. Here we had assets. I need to seclude assets or make the asset the subject. Now previously it had a minus sign here. So in order to seclude assets here, I need to take liabilities to this side. Therefore, I am going to take liabilities to the other side. When minus sign comes to this side, liabilities. When I take the minus sign for the other side of this equal sign, it becomes plus. And here we have assets. So look at that. Assets equals equity plus liabilities. So the question I asked, assets equal equity plus liability, is it correct? Yes, it is correct. Now we can develop the basic accounting equation as, now you already know that. What is it? Assets equal equity plus liabilities. Assets equal equity plus liabilities. This is the basic accounting equation. Now I proved it to you. Okay. Now after that, let's take an example. Number 1. Owner investing the following things: cash rupees 100,000, a building rupees 500,000, and furniture rupees 20,000. And other than these things, because he lacks money, he obtains a bank loan. Obtaining a bank loan. Bank loan of, let's say, 50,000. Okay, now let's see how can we record these transactions in the given equation. Look at this very carefully. First of all, we have to identify to which component these transactions are affected. Now I am writing the equation again here. Assets equal equity plus liabilities. First transaction, number 1. Owner investing cash 100,000. It is very similar to the previous example. So, at once we can record it. What he invests? Cash. So, cash we identified as an asset. Therefore, this 100,000 goes under assets as 100,000 cash. Next, building, that is also an asset to the business, 500,000. What is the type of asset? Building. Then furniture. Furniture also an asset because we use it in the business. We get benefits because of that, and it is there because of the result of a past transaction. 20,000 furniture. Now, who invested all these things? The owner. What belongs to the owner other than liabilities is we identified as equity. Therefore, this 100,000, 500,000 and 20,000 all together belongs to the owner. How much? 100 plus 500, 600,000 and 620,000. 620,000 belongs to the owner, invested by the owner as capital plus nothing at the beginning. In the first transaction, there are no liabilities. That is why I drew something like this to indicate there are no liabilities. So, all these things invested by the owner, therefore, we identify it as capital, which is coming under equity. Now, the second part, obtaining a bank loan of 50,000. Number 2, obtaining a bank loan of 50,000. We receive cash 50,000. We receive cash. It is not invested by the owner. No, not equity. But we get this 50,000 in a mean of a bank loan, which is identified as a liability. 50,000 bank loan. Okay, I think you understand what I did here. I recorded all the assets invested by the owner, then I recorded it as capital, then I identified 50,000 as a liability, but I get cash, which is an asset. So, I recorded it under assets and I recorded it under liabilities. Here I have put a plus sign Because we are getting a new liability here. We are getting something, we are adding something to the business. That is why I put a plus sign here. Now, you can understand the basics of recording transactions under this basic equation. So, let us move on to an exercise. Now, look at your screen and there you will see your exercise. Question number 1. Given below are some transactions of Amali's stationery business for the first week after starting business activities. Insert the transactions in the accounting equation. Number 1. Amali started a business investing 100,000 rupees and a building she owned worth of 300,000. Now here in the sum, Amali investing 100,000 from cash and 300,000 worth building. Therefore, first Amali investing 100,000 cash and 300,000 building. Both belongs to the owner. Therefore, 400,000 capital. No liabilities. Okay. Now, let us move on to the second transaction. Second transaction, purchased furniture 20,000. Here, they are purchasing furniture. When we are purchasing something, the cash balance of the business reduces because we have to spend some money to buy furniture. So, our cash balance reduced by 20,000 cash. But we get another asset. We acquire another asset. What is it? 20,000 worth furniture. No impact to equity because furniture is purchased by the business, not invested by the owner, and also it is not a liability. Third transaction, purchased stationery worth 40,000. Now here Amali's business is a stationery business. Therefore, this 40,000 worth stationery is her inventory. So, to purchase 40,000, we have to again spend money minus 40,000 cash, but we get another asset 40,000 inventory. $40,000 we spend to purchase inventory. Then we get another asset called inventory, but it is not invested by the owner, not an external liability. Okay. Up to now we recorded spending cash and purchasing assets. Fourth transaction, opened a current account depositing 10,000. Opening a current account. Current account means a business bank account that we can transact using checks. But here we have to give away our cash. Okay. For transaction, we have to give away our cash. But where does it go? Read the question again. Opened a current account depositing 10,000. The current account also belongs to the business. Therefore, we have to reduce 10,000 cash. But we are getting another new asset worth of 10,000 as bank balance. We are getting a new asset, bank balance or current account. Nothing changes. We spend cash and we got it back. That means we invested cash on another mode. Now, fifth transaction, obtained a bank loan 100,000. It is a very familiar transaction. You can record it at once. 100,000 bank loan means you get cash 100,000. It is not from equity but from an external source. Therefore, 100,000 bank loan. Now, earlier we stopped from here, but it is not the end. We have to see how much of these each components we have. Therefore, we have to collect these amounts or add these amounts together and see how much assets, equity and liabilities we have. Therefore, we will add 100,000, 300,000, 400,000. Here minus 20,000 plus 20,000. There is no impact because these two transactions, that means these two values are set off against each other. Same as this, these two also set off against each other because the similar values but different signs. Therefore, here 400,000. We are moving on to the fourth transaction. They are also same, minus 10 plus 10. The impact is 0. Next, plus 100,000 plus 400,000 plus 100,000, total is 500,000. 500,000. Equity. We only have this much, 400,000, nothing else. Liabilities also same, we have nothing until the bank loan. So, plus 100,000. So, my dear students, now you can see 500,000 of assets equal to 400,000 equity plus 100,000 liabilities, which is the total of 500,000. So, go through this exercise again and do it yourself. Look at it, read it very carefully and do it yourself. Look at my exercise and do it with me, and after I am finished doing this, you can do it yourself. So, today we discussed about the introduction to accounting. We learned what is accounting, the objectives of accounting, about the stakeholders and their need for accounting, and then we moved on to the accounting elements. So, you learned assets, equity, liability, income and expenses, and you learned what are the criterion to be followed to identify each of those components, and then we moved on to the accounting equation. There I taught you how to build the initial equation and the basic equation of assets equal equity plus liabilities, and we discussed few examples. This is the final example for today's session. So, go through each and every example we have provided you. You can collect your tutorials and study materials and do it yourself again and again. Practice yourself. Don't copy and write anything. Do it yourself. Try to understand the concept behind these theories. Try to understand what is the theory other than learning it by heart. Therefore, do it yourself, practice it, and if you have any questions, let us know. Let us know and do it yourself again to test it. Although you cannot do it or you have failed to do it, don't worry, you will do it one day, because we are here to provide you answers. Therefore, if you have any questions, mention in the comments and ask any questions, and if you have any suggestions or objections or your ideas about how to develop our session, please mention those things also. This is all for today's session. So, next session we are going to discuss about accounting equation further aspects as well as the double entry system. So, until we meet again, stay safe and do all your homework. Thank you.